everybody. It's Christian from Serene Education with the 4 major news update for the 23rd of April 2013. Hi guys, hope you had a fantastic weekend, and sorry for not being around yesterday, as Nikki and I were doing the first of our retreats for this year with 8 of our students, and just going over the new FX8 template with him yesterday in great detail. Thank you so much guys for making the time available to come and spend some time with us and to better understand the FX8. So this morning, the 4 majors I will be doing in the FX8 for all of you. If you are interested in this particular template and any of the Serene Education courses, etc., please don't hesitate to get hold of us to answer any questions you might have at customerservices@sereneeducation.com. So let's crack on. Let's have a look and see what happened for the Euro last week and what is likely to occur for this week. Straight away, I gauged the actual box down the bottom here on the right hand side, and straight away there seems to be a lot more red but a smattering of blue within here. But the overall sentiment for Euro against the US dollar on the weekly here in total is one of negativity. So what I want to now gauge is put in my long-term support and resistance level. So if I'm looking at my weekly, I normally take a trend from the current high, which is back in April of 2011, to the current low we saw recently here in July sometime in 2012. Straight away you can see we've had a major consolidation area around this part in the past, and we've had some highs just recently. So it allows me to see where price is pulling back, because remember, this is a long downtrend that we saw since February 2011 to the current lows here in July of 2012. It now gives me an idea of where price is trading on the pullback, because this is a major extension lower on the pullback, and it allows me to gauge where price is likely to go to, what price needs to be doing in order to be seeing any further movement. Straight away I look at my institution down the bottom. There seems to be more red than blue. We have the institution being above price, which is a negative indication. The only ones that are looking positive at the moment now are our 4-hour and our 1 month. So if I go to a 1 month chart, you can see me making lower lows, and you can see if we see price making a new low, swing low here on the monthly, that area down here where the institution is, this green line over here, would be my long-term target, and we've been in this area before in the past. So quite clearly it would be a genuine sentiment as long as we get below this 23.6 here on the weekly chart. So here you can see the 23.6. that would be roughly around the 12, what are we looking at, 12,719. Get below that area, we'll be trading below all the moving averages, including the most important institution moving average on our weekly, and we'd look to see for the MACD to remain below the 0 line and our RMO to get below as soon as possible, and this candles to turn red. You can see quite clearly the last arrow we had on our weekly was red, but the candles are still blue. So we're seeing a bit of consolidation, and that's going to reflect now on our daily. There we go. So you can see quite clearly just recently, last week in particular, we saw price attempting this 38.2 February tracement on our monthly charts, failing to break above it, forming this tweezer top, and price now hesitating. You can see we have all the moving averages below price. So there's a lot of support, current support intraday. So we need to get below all of that, guys. Get below that, and then you're going to see some plain sailing back down towards the 23.6, which you can see is just off center here, which is this current low here. RMO undecided. You can see quite clearly when we're in a nice strong trend up or down, the RMO is very directional. Here you can quite clearly see going sideways, RMO is above and below the actual 0 line, which doesn't give us a clear buying opportunity and clear selling opportunity. So if we're seeing 38.2 acting as a major resistance level near term, then ultimately we should be looking for negativity. Okay, there's a lot more negative sentiment intraday. We are in a negative. The institution on every time frame bar the monthly and the 4-hour are actually above price. These ones are above price, acting as resistance, so therefore we should be looking for negative sentiment. So as it stands at the moment now, rather clear this 4-hour intraday resistance level. There you go, you can see it quite clearly. There's a consolidation area there, but then you have your institution. So rather get below your institution, then you'll be trading into clean air down towards that 38.2. so if you just took a quick measure stick of where the institution is, and then to your first target would be down here at 23.6, you're looking at roughly 248 pips. Take away your spread, so there's more than enough profit to the downside if and when we see price breaking below this institution. If it continues to find support above the institution, then there's always the likelihood of price reattempting the 38.2. Get above 38.2, then we should be looking for higher highs. Onto sterling for our weekly chart. This particular pair have been falling over the months. Quickly, all-time high in 2007 to the low here at the bottom end 2008. You can see price has failed to get above that institution since and making lower lows. So consolidative, but with negativity on board. You can see the MACD's floundering as prices move sideways. RMO is undecided as on the monthly where to be. So below, above, below, below. So no strong trend direction, which is not a good sign. Notice our institution moving average down the bottom here, bar the 4 hour like we had on the euro. Everything is negative, so we should be looking for negative sentiment because the institution's above price on every single other time frame. We go to our weekly chart. The one thing we got to be very aware of this particular price is the fact that 15,300 since 2010 has been a major support for this particular pair, and recently we've seen it being breached. Okay, I'm just going to draw a nice line of here. This 15, where the 23.6 area is right now, that is our major support and resistance level. Okay, so I'm just going to draw that nice and thick. That's also where the 23.6 area is. So that constitutes to a major concern, because before, since 2010, each time price has fallen back from the institution on a monthly and weeklies, it's always found support on the 15,300. This time around in 2013, hasn't found support. It clearly broke through a very negative candle here on the weekly. You can see quite a very directional candle. We moved towards the 1485 mark, which was the price support and resistance breakout area, consolidation area back in 2010, and here again it did exactly the same. Consolidated when we reached up, and prices bounced higher. It now needs to remain at the underside of this, guys. Prior support needs to become new resistance if there's a breakout in the direction on this negative breakout. So if you look at the RMO on our weekly, we're below, and our MACD's below. The MACD's just gone green, so we'd have to wait for the weekly close on this to see if it's genuine. However, price is still trading below that major support and resistance level. Okay, and you look at most of the sentiment out there, weekly looking slightly positive. That's only potentially because we've seen the pullback. However, the sentiment intraday on our smaller time frames is one of negativity, so it's now looking like it could potentially be looking for potential resistance. So as long as it maintains below that 23.6 here at 15,300, then on our daily and lower we should start seeing negativity. Notice we had price trading above it on our daily, however not finding support and moving higher. Okay, very important. If price is to break above or below a major support and resistance level, price needs to find support and then to build on that. And if it doesn't, then in this case the negativity still outweighs. You can see the RMO is still below, even though we've had a pullback. Complementing this pullback after the breakout on our daily, the RMO is still below the zero line, and our MACD is now below on our daily. We have a red arrow, red candle, fantastic. All we need to see is a break of this intermediate uptrend here and get below that, and then we should be targeting back towards those 14,800 marks in the intraday time frames. On to the US dollar Swiss franc. Let's have a look and see what's been happening on the weekly chart. Price pulling back after a major long-term downtrend on the monthly. You can see I've taken a February reading from the prior highs that we had here back in 2010. This tweezer top, price has fallen, and in the bottom of 2011 we saw bottoming out and price reverting to the upside. And in doing so, tackling these fib areas here, we had the 23, the 38, the 50, the 61.8, which is where price topped out on our weekly chart, way up here in August of last year. That's correct, which was the institution moving average. Since then, unable to actually build on that, and price has now been consolidating in a consolidative range since October of last year to where we're currently trading now. So not really going anywhere, and you can see the 50% line now being the monthly and weekly long-term fib retracement area as a sticking point for this particular pair. I've also taken another fib ratio from the low that we had in 2011 July up to the current highs that we've seen recently, roughly around the June 2012 mark, and it's now projected these lines to the downside in orange. So you can see the one in red. There we go, the 23, the 38, the 50, the 61 of the pullback on a monthly time frame. Okay, so you can see quite clearly failing at 61.8 right at the top, and then the 50% line now, the red line at the top there, you can quite clearly see where price is trading at the moment is currently being a resistance level. So if you want to, as long as price maintains below the 50% line. And now you can see I've taken a fib area from here to here. You can see there's a very strong, where these two fib lines now come close together, that indicates a very strong resistance level. You can quite clearly see price has been consolidating quite clearly. We do need to get below all of this in order to see price dropping to the downside. If it does, you can see the 38 now is actually married the 38% that we saw recently on our monthly. So these two, that constitutes a nice strong support, so they would be a nice target to the downside. In this particular case, though, you can see our long-term moving averages, monthly and weekly, are still above price, acting as resistance. You can quite clearly see on the weekly, price is not too far away. The monthly, it was even further. However, on our daily and our smaller time frames, the institution is below price. So supporting price has been moving higher or consolidating in this range. So otherwise, very mixed signals. Intraday, we're seeing a lot of buying sentiment, and that's primarily because we've seen a tweezer bottom recently on the daily chart. Here again, this is a tweezer bottom here at the 23.6 area. So the pullback that we've seen on our weekly time frame, you can see the 23.6 acts as now support here, and we had a tweezer bottom. So that's sent after a significant pullback here. You can see recently there was a consolidation high. Price was unable to fail to break above these highs. It fell back, and in doing so, closing below all the moving averages, which is a very negative signal. However, as we went into the 23.6 fib retracement on our weekly time frame, we had this tweezer bottom, which has to occur at a major support and resistance level at the bottom of a trend, a pullback. So you can quite clearly see we saw price falling recently, and now she's failing it. But now you can see quite clearly there is definitely resistance above price where she is right now, and price has been tentatively trying to get above all this resistance near term here on our daily. It has to get above all this in order for price to actually move higher. But then we've got this 50% retracement from a monthly. Got to get above all this, you can quite clearly see. And then between here and back to where she came from would be a lot cleaner. Okay, guys, it's so important. On our daily, you can start seeing the RMO is just above the zero line, and our MACD's back up again. So it's telling that we're seeing buying sentiment because we've got a blue arrow and our candles are blue. However, we have a lot of moving averages in the way, and we have to be, we've got to be really patient, because if this is a genuine tweezer bottom, we need that sentiment to follow through now, and we're starting to see a bit of it, but it's very undecided, especially on our intraday time frames, primarily because we're trading into a lot of major support and resistance levels intraday. On our 4 hour, just want to confirm that with you. Quite clearly see there's a lot of resistance to the upside. Okay, the institution is still above price, and you can see there's this near-term resistance. If we get above all that, then the 50%, which will be close to our institution, that would be our potential target. So as it stands at the moment, up to the 50%, there's 34 pips. To the institution, there's another 20. So in this range over here, this tight range, there's enough to make a quick 20 pips, but do it very, very aggressively though. Take your profits as you head into these areas, wait for the breakout and the support, and then target the upside for the foreseeable future. Moving on to the last pair of today's 4 majors is the US dollar Japanese yen. And on my weekly, you can quite clearly see that price, the US dollar has gained a lot of strength against the yen over the since September of last year. In fact, August, September of last year, we saw price really moving higher, building on a very strong support through most of 2011, and then 2012 lows higher than the 2011 lows, telling us that sentiment was starting to look positive. And sure enough, we got that bounce, or that major strong move, through the latter part of August, September. So as it stands at the moment now, these levels here in red are my monthly fib retracement areas. So 23.6 here at the 87 was the major support and resistance level. First target, reached it, broke out the pullback, and then the continuation next to the 38.2, which was around about the 9400 mark. And for this particular pair, consolidated here for a long period of time, over a number of weeks, and eventually we got the breakout, the pullback, and then the continuation higher. And that continuation higher taking us up to the 50% retracement of the monthly, and that was the 100, just below the 100 here. And on our, you can quite clearly see that price since then has actually consolidated. So you can see here at 99.40, you can see quite clearly there are a lot of highs in and around this market, the 50% line. So now, in order for price to continue up, because it's been positive for so long, we do need to see this line here at 99.54 5 being broken on our MT4 platforms. Very, very important. If we don't see a break soon and we continue to see price finding resistance here, the outcome down the road is for one of negativity, and then we should see further stronger pullbacks to price support and resistance levels. There's one roughly around here in the shape of, what are we looking at, 96.72ish prior highs and the support. So high support, so this area here would constitute a nice strong target to the downside, and where price is trading now to that level, you're looking at roughly 100 and what's that, make it 165 pips or so, give or take. So there's still profit to the downside, guys, if we see price still failing at this level at the moment where price is trading. So intraday, you can see our institution is still below price on our long-term time. However, on our intraday, because we're seeing that resistance level, our institution moving average is now above price, acting as resistance. That's bound to happen, and also because of the fact that we're seeing a strong pullback at a major support and resistance level high. We're seeing on our smaller time frame red arrows complementing that, and our R square is telling us that it's genuine sentiment, negative sentiment on the pullbacks. So we need, if that's the case and it continues, then ultimately we should be looking back towards these current lows that we saw just recently, that we saw the US dollar falling towards in April of this year. So if we go into our 4-hour time frame, you can quite clearly see here through April we saw price heading into the support area here, which happens to be just close to our institution. So if we're seeing price failing here yet again, then ultimately you see intraday, you got this little intermediate trend. You can see swing high, swing high, swing high, break at this major support and resistance level, monthly support and resistance level. Ultimately we should be looking for negativity now to prevail, and if that's genuinely the case, look to target back towards the support and resistance level down the bottom here, which you're looking at, as I mentioned, about 170 odd pips to the downside. So there's enough momentum here. We just need to see the in this case on the hourly, you can see there's a great opportunity here if and when the hourly closes below the institution, because if she does that on my hourly, my R squared is telling me this is all genuine negative sentiment, and my institution will be red, and I'll have a nice entry to the downside, and I will be targeting those lows that we had recently back to this level here, which is 170 pips away. So great opportunity to the downside, as long as we see a break of this consolidation on our intraday time frames, so roughly around the institution, which is roughly 98, what's that, we got 98.50 ish. I'll go for 98.50, just to give a bit of wiggle room, get below that genuine institution. If we find price bouncing on the institution now and failing to break below it, then there's always an opportunity for price to continue up again and to reattempt the prior highs it's just come from. So be very aware. If it's to be genuine sentiment intraday, we do need to see a break of this institution moving average, primarily on our 1 hour or 4 hour candle, to confirm the sentiments with us. And if she does, then look to the downside. That's it, guys. That's my analysis on the 4 majors this morning on the FX8. Hope it made a lot of sense to you guys. If you're interested in this particular template, please don't hesitate to get hold of us. We've got some really great prices on it, and there's also we are holding some really good events to teach you guys how to use the actual template. So if you are interested, please drop an email at customerservices@sereneeducation.com. Any questions you might have relating to this particular template, shout. Okay, we're here to answer your questions. Other than that, if you are using this and any of the Serene Education templates you're using recently, please apply strong money management to them. Okay, it's great having a great template, but if you don't back it up with some money management, it's worth nothing. Other than that, look and see. There's a lot of news out today, guys. There's a lot of fundamental news out today, especially for Europe. We have a lot of PMI, flash, service, and manufacturing numbers coming out of Eurozone, and we also have the public sector net borrowing figures for sterling at 9:30 GMT. Then we go into this afternoon, we have a lot of Canadian retail and core retail sales figures. Then we have the next, we have the Bank of Canada Governor Carney, which is going to be the next, the Bank of England's governor soon, but he's talking with relating to the Canadian mark. And then we have the US flash manufacturing and new home sales and official. That's for the US market. But then later this evening for the Kiwis, we have the interest rates announcements. Are we going to see a change? They're expecting no change at 2.5%. It'll be interesting to see how that one comes out and see how, if you are trading the Asian markets, how that benefits. Other than that, have a fantastic trading day, and I shall see you first thing tomorrow morning. Until then, you guys trade serene.